Oil prices are starting to drop. The big question is, are they going to stay there? Hey, everybody, welcome back to another beautiful day in real estate. Today, we're going to be discussing oil as we always have. And there's a couple stories that came along the line over the last few days that have directly affected the stock market. The big reason that I wanted to jump on today is not only to talk about oil and the economics, but also to talk and give you a warning about the AI world that we're starting to see. Now, before we jump into that, let's talk oil and let's talk charts first. So it's getting kind of fun to watch this stuff play out pretty close to exactly as you anticipated. I mean, we talked about this downward channel happening and it bounced perfectly off this downward trend. I mean, in technical terms, this could be considered a double top. We have a higher high, lower high, major move, and this could potentially push down. My guess is more than likely we're going to push back down to the $77 a barrel. The reason I say that is just because there was something that popped up, and it was that the U.S. has reportedly offered Iran a deal to halt the siege and lift the sanctions in exchange for reopening the Strait of Hormuz and ending proxy attacks, according to AI Arabia. Exos also reports that Rubio told the several foreign counterparts the U.S. does not plan new strikes on Iran for now, with pressure shifting towards a naval blockade, new sanctions campaign instead. Crude oil fell 4%, and the 10-year Treasury bond from 4.2 to 4.62. So, 4.72 to 4.62. So that's why you're starting to see oil fall off a cliff, because they're no longer going to be going after in a physical battle. They're going to be going after them in a sanction and a very money strategic way. Now, those of you that don't know, the Iranian dollar actually lost 97% of its value versus the US dollar over the last year. And that itself, I mean, I just want you to imagine your dollar is now worth 3 cents. That's what these people are facing right now. That's what this world is facing right now. So it's not really about it's not about dominance. It's not about control. I shouldn't say it's not about control. It's not about just taking over and taking full control of a country. It's about establishing a principle. And the principle is that they're going to go after their money system, not just the people. And when you go after the money system, people can't make life work. Iran itself has been under extreme amounts of stress for many, many years, considering the wars that we've had. We had the Iranian war. We've had them included in multiple different scenarios throughout the past. And now the U.S. government is basically pushing the teeth of the curve and getting ready to do a stomp. Because if you destroy the dollar and destroy the economic system, you take sanctions, you make it so they can't trade, so they can't make money, you're going to destroy an entire country without firing a single shot. Now, I know that they have been in war and there's been shots fired, et cetera, but that's the significance behind what they're doing. It's not necessarily even a matter of killing people or proving a point to say that this person, did this and this or whatever. It's a full-on chess move that's going to destroy an entire country if people don't pay attention. And the thing is Iran has been an enemy for so long for the United States that they are finally, I shouldn't say they're finally, but they are taking the necessary steps to essentially end this war, end this conflict. It's not exactly a great one, but it is something that we are seeing. But anyways, that's why we saw oil kind of fall off. But the thing that we've talked about before, I mean, it's pretty simple to see how these moves are going to make, right? So we talked about it yesterday. The RSI was overbought. We talked about that Monday. I apologize. Talked about that Monday. And then literally Tuesday through today, it fell right off. And the reason was, again, we didn't see any volume above the overbought range. It started to kind of curve over. The RSI, stochastic RSI, was overbought. So most of the volume was pushed in. A lot of the leverage was pushed in, so then it starts to fall off again. And this was spot Brent crude oil, and this is WTI crude oil. Again, very similar concept to what we're seeing, right? We've seen the lower highs. Lower high, lower high, lower high, lower high, lower high, and now we're coming back down again. This is a very positive move for people when it comes to gas prices. It's positive when it comes to bond markets because, again, let's look at the 10-year Treasury. 10-year Treasury fell off a cliff again as well. I know this move doesn't seem so significant, but when it comes to Treasuries, moves like this are actually pretty insane. A 2%, a little less than 2% move in 2 days is actually a pretty significant move. And again, remember the basis points follow about 200 basis points. So about 2% is the variation between the 10-year Treasury bond and the actual market that we're in now. So if we're at 4.6, means that interest rates are right around that 6.6 to 6.7 range, maybe close to that 6.75. The big question is there's a major support right around here at 4.61. Is it going to fall through? I think that there's a very big possibility that it does because they have continued to make the conversation known that they're going to be prioritizing bringing bond prices down. They doubled the amount of money that they're now pushing into the markets from the U.S. Treasury, which was $2 billion they were using for bond buybacks. Now they're using $4 billion a month. That's a pretty significant move, and that is helping push this bond pricing down. However, they did have the conversation a couple days ago where there's $1 trillion in surplus in the U.S. Treasury, and they're talking about utilizing it to do bond buybacks. Now, I'm not saying this will change everything forever, but what it will do is it will give pressure on the bonds to drop. I shouldn't say the bonds like they're people, but it will pressure the bonds to have lower yields because they're going to be buying up a significant amount. By having lower yields, that will forecast back into mortgage rates, right? So let's take a quick peek at mortgage rates since we're here. Where the heck is it? There it is. Boom. Okay. So mortgage rates right now, like I said, right around 6.75. Okay, perfect. Yeah, we were pretty close to that. So right now, this is nuts, by the way. So we haven't looked at this in a long time. Oops, there we go. So right now, if I went out and bought a house for $450,000 at the standard loan, my payment would be right around $2,900 a month. And that's not including insurance. That's not including taxes. That's not including special assessments. That is including your mortgage payment and your interest payment. And that is super scary to see because a lot of people are really going to be struggling with this. And this is why so many people aren't buying homes right now. I talk to buyers all the time. They're not in a hurry anymore. They don't care. They're not rushing to get to the market. They're not rushing to buy a home. They're not too worried about it. You know why? Because they're probably in an interest rate that's really good, or they're in an apartment right now and they're wanting to buy a house, but when they look at it and they say, wow, I can still rent for $1,700 a month, even though it went up this year, but the mortgage payment's going to be 27. Most lenders don't really know how to explain and showcase how that's beneficial for them. So the market's been moving very, very slow. And there was a interview that I listened to the other day where they talked about how the first-time home buyer market is dead. The starter home is dead, that they're no longer going to have this. Now, I disagree with the aspect of it because I live in North Dakota. We still have affordable homes here. I'm just talked to my boss yesterday. We're talking about bringing out some smaller versions of homes that are 1,100 to 1,400 square feet, 2-stall garages, no-stall garages, just so that we can have a home that's going to be closer to that 3 to 350 mark. Right now, there's a lot of people in North Dakota that are living off Social Security, living off of smaller retirements, things like that, and they're in homes they've been in for 30 years. That's my biggest customer right now. People who are moving from their big homes or the homes they've been in for 20 years to buy a one-level home. The problem is the majority of these people's homes aren't worth what those patio homes are going to cost to build. So what we've been doing is trying to utilize our skill set, if you will, to pull plans again that were utilized in the past or new ones that we can find where we can start benefiting these people, because not everybody can afford to buy a $600,000 house. And right now, I'm talking to a customer right now. We have a development here in Mandan. We're building a custom, like a man-made lake on it, and to buy a lot there, it's $155,000 on one side, and if you're going to the other, it's $250,000. I mean, and this lady I love this lady. Such a sweet lady to work with. She owned one of our bars here in town for a long time. I actually still go there now with the new owners and gamble from time to time, but she sat down and her number in her head was 400. And then by the end of it, now we're looking at a $650,000 house, and that's pretty standard things. Like, that's not very uncommon, and then we also have plans that we can build anywhere from $450,000, right? I have a plan right now. Right around $450,000 with an $85,000 lot, and it's going to be 4 beds, 3 baths, 2,200 square feet. Right now, though, I guess my whole point of the rant was home prices are getting significantly more expensive. So the way to do that is either A, build more homes, right? Which they've been doing in the bigger metropolitan areas. The thing is North Dakota, we have a housing shortage, but we really don't. Like, I mean, it's not like people are just chomping at the bit to just get into a home right now. Like, people are looking, but it's not nearly as crazy as people would anticipate. For a long time, we heard that there was just a big housing shortage and that houses were going to run like crazy. I mean, every customer or client, whatever I'm working with, whether it's building or realtor, it's very slow moving. It's very feet dragging conversations, right? Because nobody's really in a hurry to jump on anything right now. They're waiting for better days. And I still think it's very possible that we are going to see the bond market start to drop. We're going to start to see interest rates drop, and it's going to come right before midterm elections. Why? Because that's how the government works. They make moves according to their political agenda. And the political agenda now is to get more seats on the red side. Right now, the conservatives run the White House, they have the House, they have the Senate, and they don't want to lose that power moving into the second 2 years of Trump's term. And again, forget what you think about the man who sits behind the desk, but what you should be focusing on is, what does this mean for me? Because we get so mad that these governments are doing all these moves that it's not what we want them to do. But the thing is we can still benefit from them. We can still profit from them. SpaceX has been a very interesting one for me. And the reason is because it followed to a freaking T exactly how the market moves, right? We saw the major pump, we found a support, traders came in, leverage trading, basically bought the oversold, and then pushed the market all the way back down, found a bottom, found its resistance, which was previous support, and now we're starting to consolidate, as we talked about. And the reason that we're starting to consolidate is because AI continues to make its moves. Now, another thing that we need to talk about is global physical old backed ETFs attracted $6.4 billion of inflows last week, the largest weekly intake since January, and the third largest weekly inflow on record. North America led with 4.4 billion, followed by Europe 1.7 billion, Asia at 300 million. This marked the seventh straight week of inflows, the global gold ETFs pulling in 16.4 billion over the stretch. Total AUM, or total gold in global gold ETFs, rose by 33 billion last week to 615 billion, the highest level since the second week of May. Now, why is this very important? Why are banks starting to buy a bunch of gold? I shouldn't say starting, but are ramping up the amount of money or the amount of gold that they're purchasing. It's not necessarily because I'll be straightforward. I think hyperinflation is coming. That's why I think they're buying this. I mean, if you talk about China, they've been buying so much gold over the last few years. United States is starting to buy more. Russia's been buying more. EU has been buying gold. And the reasoning is not necessarily because gold is the predominant best thing on the planet. It's because they're preparing, because they see the same thing I do. And they're anticipating that we're going to see a significant raise in inflation. And we're going to see a significant raise in prices in assets. And it's because they're going to be funneling money in. That's just how this is how it works. Like they push money in like they did in COVID. They pushed tons of money into the economy, gave you stimulus checks, and then they're like, oh, inflation's high. We got to raise interest rates, brought interest rates up to a point where people can't afford to live, and devaluated the dollar in the process. So right now, the big thing that we have to be paying close attention to is hyperinflation a reality? And hyperinflation is a very good possibility because they're printing money. They just double the amount of money they're printing, or double the amount of money they're spending on government buybacks. And now they're talking about injecting more money. When you inject more money into a system, it devaluates the dollar and makes assets run. And that's where we're at. That's the simple peace of mind. That's where we're at. They are starting to funnel money into markets because they need the markets to look good for midterms. And that's just the simple truth of it. You can get mad, you can scream, you can kick, you can do whatever you want, but that's the reality of where we're at, right? So again, as we talked about the S&P 500, so we can wrap this up today, the S&P 500 is still above that trend line where we've talked about that channel that's been in since 2007. The only time it broke above this channel was during COVID and now. And it found solid support right here. It really did, pumped up. We started to see some downward action. The stochastic RSI is at its bottom right now. The RSI is staying above the middle, above 50, 47, right around there. And by that right there shows me a little bit of strength. It gives me a thought that we're more than likely going to see the market push up in the next couple of days. So let's just pull this up real quick. So if we go all the way back, like I said, I do this all the time because it's kind of an important deal for us, but that's not what I wanted to do. Whoopsies. All right, let's zoom out here. See, back here in 2020 was the only time that we actually saw Blake break above. And then we saw the new bull market moving into 2026. I shouldn't even say bull market, but we saw a lot of money moving in. And the reason it's moving in is because 20% of the S&P 500 companies are leading the charge because they're AI-based companies or they're utilizing and maximizing AI. Now, the last thing I'm going to touch on, totally forgot about this, so we're going to touch on it real quick. I think that Anthropic is expected to IPO investors in total addressable market exceeds $30 trillion, topping SpaceX $28 trillion estimate according to Wall Street Journal. The figure presents the potential value of work Anthropic believes AI models could eventually perform, not a direct revenue forecast. Anthropic generated $11.3 billion in quarter two and could seek to raise as much as $100 billion in roughly a $2 trillion market cap. Okay, IPO documents are expected within weeks, potentially setting up September, early October listing. Okay, this is why this is important to us is because, again, AI is starting to make its move, right? And the Clarity Act is supposed to be voted on September 15th, which is utilizing cryptocurrencies, giving banks the availability to borrow, utilize, hold, transfer. But the thing is I think this is getting close to a blow off top because I'm seeing AI become so predominantly the main focus. Everybody's talking about AI. But the thing is when you have a new product like this, chances are we're going to over excessively push it until we reach a point where we're going to have to stop, recoup, and figure things out and then move forward. That's why I still think that a blow off top is possible. That's why I still think a recession is possible, because we're going to see a position where all of these markets are going to break at some point. I shouldn't say all, but a majority of them. And AI right now is the one that's over leveraged, overhyped, and it's not producing as much as people were anticipating. And that's exactly what happened in the dot-com bubble. So I think that something like this, the Anthropic, which is Claude, by the way, Claude AI, they are going to come out. It's going to do the same thing that SpaceX did. And I mean, you can buy whatever you want, but here's the thing. I'm more than likely going to be short in Anthropic the day or two after it hits IPO, because that means that the market's going to be saturated and then it's going to drop and I'm going to make some money and then I'm going to start consolidating it. You don't buy at the bell when the first bell hits. You buy when the market bottoms and then you start to invest from there. Don't be silly with your money. Make sure to like and subscribe so we can bring you more content. Have a blessed day. We'll see you soon.